will need in our trading journey. Okay, so today we'll talk about ask and bid price, spread and swap. All right, and we'll see how we can talk about lot size and pips. Okay, so let's start with what is ask and bid price. Let's start with that. Okay, so ask price is quite very simple. It's not a big, it's not like a big, it's not like a big word. Okay. So for ask price is like I think for every time you're buying something in the market, there is always a price attached to in which the seller wants to more like sell the product for you, and you as the buyer, you always have a price in which you want to pay. So ask price is more like the minimum price that a seller is willing to sell. All right, simple. This is the minimum price a seller is willing to sell, while the bid price represent the maximum price you are willing to buy. That's what a bid price is. So there always be this difference in price, and that's why there is price fluctuation. So, for example, you go to the market, you want to buy a new phone, maybe an iPhone or a Samsung phone, and especially when it's second-handed, and tell you the price is 200,000 naira. You want to, that is the asking price. You want to beat down the price down. Okay, so you might want to say, okay, you will pay more than 50,000. That's your bidding for the price. So the price in which the person is selling it, that is the minimum. He wants his minimum is 200k, right? 200,000 naira. Why your maximum is at 150k. So the difference between this ask and bid price is what we refer to as swap. All right, the difference between the ask and bid price is what we refer to as swap. I believe we understand that very well now. Okay, so I'm going to quickly show that on the chart. I'm going to quickly see if I can show that on the chart so that I will understand what I'm saying. So when you get to the chart, this is what we have. All right, so for every chart, this price you're always seeing on the chart is okay. When you even open your market watch, which is Control M, you will see the ask and the bid price. So for Euro USD, the asking price is 1.07203, and while the bid price is 1.07200. So there's always a difference. So the difference between this price is what makes what we call the spread. So you can actually see the spread on the screen. All you need to do is, apart from it being listed on the market watch here on your chart, MetaTrader 4, you can right click on the chart, go to properties and come to common. Okay, so you can show your ask line. What is appearing on the chart is your bid line. So you can actually show your ask line and you'll now see it boldly. I'm going to zoom out. Okay, good. I'm going to zoom out right now. So the first line is your bid line, while the other one is your ask line. So why you need to understand this is The spread, I've said that the spread is different between the ask price and the bid price, but the spread can also be termed as more like the fee the broker charges for every trade you execute. So if I was to take in this trade, I'll be in a loss. If I'm buying, okay, if I buy, the market will be executed above this ask price. All right, so the market will have to move above this entry before I go into profit. So you'll be in a loss instantly when you click buy or sell in the market. Then when I click on sell, the market will have to go, both the ask and the bid price will have to go below my sell price for me to also go in profit. So whether you're buying or selling at every point in time with an instant execution, you will be in a loss. That until you have covered for the spread, which is this space here that you're seeing on the chart, that is when you will go into profit. I believe that is well understood. Then the next terminology that we have is your swap. All right, the next terminology we have there is a swap. Now the swap is also quite simple. The swap is also quite very simple. Swap is just defined as an overnight charge. So this is a form of commission charge for leaving a trade running overnight. All right, most times it's actually a function of the interest rate of most countries, but you don't need to memorize anything. All you need to do is come to your market watch. Let's say, for example, this is GBP USD. You right click. Okay, let's use Euro USD. You right click and you click on specification. All right, when you click on specification, you see the specification for each pair. But what we want to get out is the swap charge for both buy or sell. So the swap long for Euro USD, if you are buying Euro USD, you'll be charged $3 for holding the trade overnight, while if you're selling, you'll be charged $1.25 for holding the trade overnight when you're selling. All right, so it's important you understand that. So all you need to do, right click on any pair. If you are doing it on your phone, if you long press the pair, you can click on properties. You also see the same parameters, specification, but on the phone it is properties, and you will see the properties. All you need to go and check is the swap long and the swap short. That's what will tell you if for holding a trade overnight you'll be paid. But luckily, I think Trade Nation as a brokerage has a swap free account. So if you don't want to be charged swap, if you don't want to be paying for this swap for holding your trade overnight, you can select, when registering, you can select a swap free account. I believe that is quite understandable. Any questions so far? If you have any question, you can easily type it on the chat box. Okay, if you have any questions so far, you can type it on the chat box, or you wait and after the class you can ask the question on the WhatsApp group. Okay, so we've talked about what spread is, swap is, as well as the ask and the bid price. All right, so today, now the next thing on here we're going to talk about is trying to understand what is called pips. Okay, now pips is also very important topic in forex. It's very important to understand what pip is. All right, pip is more like it's just defined as the movement of price. That is the simplest definition that you can have. All right, movement in price, that is what pip is. Okay, so the price of a commodity will move from one place to another. Remember we said yesterday that the chart just comprises of price against time. All right, so the duration, the movement of this price from one place, from one time to another, That movement is what we just referred to as pips. All right, so a pip is a unit of measurement that expresses the change in the value of price. Or secondly, pip is the smallest unit of fraction that the currency pair can move. Okay, then the smallest unit is referred to as pipette. So it's simple, it's just a term. All right, so this market has moved from this place to this place. So that movement is what we call pips. So I can say, okay, the market has moved so amount of what pips. That is what pips is all about. All right. So now, having said that, I'm going to teach us how to practically understand how to count your pips. Although there's actually a manual way of easily counting these pips. All right, there's a manual way of easily counting the pips, but I think I'll do that first before I'll teach us how to, especially for those of us who are using our phones. It's important that we know how to manually count the pips. All right, then those of us using system, I will look for a way to, I'll teach us how to easily use the crosshair to calculate your pips on your laptop. Okay. All right. I'm trying to look for my whiteboard. All right, so now in forex, the pips count is different from your 1 to 3. All right, so normally in mathematics we start counting from 1, 2, 3, 4, 5, but in forex what we count as 1 pip is the fourth number after the decimal. All right, so what we have in forex is 0.0001. all right, that is what we have as equal to 1 pip. All right, then automatically we have that 0.00002 is 4 digits. All right, is equivalent to 2 pips. Just follow me. Then we have 0.00003 as 3 pips. All right, now 0.00009 will be equivalent to 9 pips, while 0.00010 will now be equivalent to what, 10 pips. All right, equivalent to 10 pips. I'm sharing my screen. I'm sharing my screen actually, so I don't know. Can you see my screen now, please? Let me see. Okay. Okay, good. So now what this means is that all you just need to do like 0.090 will now be equivalent to what, 90 pips. All right, So if we now have 0.00100, we'll be having 10 we'll be having 100 pips. That is how it goes. So it's just an arithmetic progression from 0.001. That is the least amount of what pip. But any number after the 0.001 is now referred to as pipette. That is insignificant. All right, that is actually also very, very insignificant. So for this to become more clearer, all we need to do is we're going to check the beginning of price of today. All right, so this is where this price started from. All right, this price started from 1.07952. all right, we have 1.07952. So we're going to write that down. The current price of this market now is 1.07241. all right, so we're going to subtract that. So if we're able to subtract that, what we have is the amount of pips the market has moved today. All right, remember we said that the market is just moving, is a movement of our price. Pips is just the movement of price. So from one point to another. So the movement of this price from the beginning of today, the market opened at 1.07952. So we're going to subtract it from, so we're subtracting the opening price from the current price. So 1.07241. all right, so if we were to subtract that, okay, what we're going to have is 2 from 1 will give us 1. Then we have 5 from 1 again, we have 1 again. Then 7 from 2 will be having 5. 0 from 0 we have 0 from 0 we have 0, and we have 1 from 1 is 0. So the markets, from what I said before, we have how many decimal places now? We have 1, 2, 3, 4. 1, 2, 3, 4. So this is like the market has moved. We can say the market. Can somebody answer the question on the chat box? We have our answer 0.05110. So how many pips will you say the market have moved? Can somebody answer that? Okay, can somebody answer that? How many pips will you say the market have moved? Okay. No, it's not 4 pips. Remember I said that the fourth number after the decimal is 1 pip. All right, and I said that the third number now is now in tenths. Okay, let's say the fourth number is in units, the third number is in tenths, while the fifth number is in hundreds. Okay, which is 100 pips, 90 pips, 10 pips, and 0.001 is now what? 1 pip. So if you subtract it, we'll be having 0.0511, and that will give us 51.1 pip. Remember, this is now 1 pip, this is now 11 pips, this is now what? 50 pips. All right, so this is 51.1 pip. Now this can easily be measured on the laptop when you are using what we call the crosshair. All right, you click your crosshair, Ctrl F, and instead of stressing yourself and doing all these plenty calculations, saving yourself the headache, just pick from where you want. Now we are factoring in the movement of today. So this is the opening price. So I'm going to left click and now drag my crosshair to wherever I want it. So to where I want it now, I'll be having we have three numbers. I believe we can see my screen very well. We have three numbers. One is the first one on the left hand or the right hand side is the price, which is the price where my cross share, I want my cross share to be 1.0724. All right. Now the mid number there is now where the pip is. Now that will now take us to the next point, which is what we have there is the system shows the number in points. So I'll do a quick one. The system shows the number in points. Now, I just want us to know that 10 points is equals to what? 1 pip. So automatically, since we have 700 points there, what we have that has moved in the market is what? 70. What we have in the market. Okay, I think somebody was correcting me earlier on. I think I see what the person just said. It's actually 7, not 9 minus 2 is 7. So what we now have is what? Instead of 700 points, we have 70 pips. All right, I know this might sound confusing for those who are still learning. All right, but trust me, with time you will understand. All right, so this is just like what pips is all about. With time you will understand it. Just know that the movement of price in the market is what? Pips. And whatever you're coming to do in the market, you're coming to make pips. So it is the pip amount that you have made that is what will now determine how much you make in the market. And that now takes us to, okay, before it takes us to lot size, I want us to now understand. Let's say I'm going to a daily time frame. All right, so I'm currently on the daily time frame, which is the D1. I explained the time frame in previous classes. All right, so good. I can categorically state the amount of pips the market has moved from the beginning of this month. So remember I said the time separator on the daily is 1 month. So this is the beginning of this month, September. So all I need to do is to take my crosshair and drag it to where price is. Remember I said the middle number is the pip movement, but it is in points. So all I just need to do is move the decimal place one place backwards. So we have 1,779 points. But in essence, what we have here is the market has moved, Euro USD has moved 177 pips. That is what it implies. All right, so I can also calculate the total number of pips moved for last month. All I need to do is set my crosshair here and drop it to here. This is about 250 pips. All right, if I move my chart to the weekly time frame, I can easily calculate the amount of pips the market has moved. Each time you go to a new time frame, your network is where you can easily refresh. Just right click on the charts, you click on refresh. All right, so I can calculate the amount of pips the market has moved from this year. So like, I just need to move my crosshair from the bottom, which is the opening price, to the highest. So this is about 700 pips. I can calculate the one of last year. Euro USD sold last year, so it moved from this point to this point, which is about 1,600 pips. All right, because it's 16,000 points, so it's just 1,600 pips. I believe we understand what pips is now. Okay, do we have any questions? Is anybody lost? Is anybody lost currently about the pip movement? Now, so if you're using your phone, all you need to do is know the current price. All you need to do is, what is the current price? Or you know the point from which the different points in which you want to measure. So you can write down the price down and now subtract them. All right, and move your decimal places and you will get the pip value. All right, all you just need to subtract them. The value you get, you move the decimal place. Remember, 1 pip is the 4th number after the decimal. So that now takes us to the next important topic after the pip, which is the lot size. Okay, the lot size So these are more like the calculation I was talking about. You check the price from one point to another. After subtraction, you get 40 pips. All right. So you will get about 0.00. If you subtract this now, you can use your calculator. You subtract 1.2535 from 1.2495. I think you're supposed to get, let me see, let me use my own calculator here. 1.2435 minus 1.2495. I'll be having 0.004 as my answer. That gives me 40 pips because it's not up to, assuming it's 0.004, it's now 4 pips, but now this one is 0.04. It's at the third place after the decimal, so it's 40 pips. All right, with time you get more understanding, and later you can ask more questions and I will answer that. All right, then the next important thing is the lot size. All right, the lot size. The lot size is defined as, okay, a contract used to describe the size of a trading position in Forex with reference to the unit of the currency. All right, so this is more like an ambiguous word, although I know I sent some of us materials on the group for us to read up. So like I always say, all we need to do is, well, we're doing practical. So unlike the pips, the Forex is more like a contract, all right, that describes the position in which you are entering each trade with respect to the unit of the currency. So first of all, the unit of the currency that we are using here is the USD. All right, so each lot size has a contract position. So I'm going to explain that. So we have, first of all, 3 types of lot sizes. We have the micro lot, the mini lot, and the standard lot. The micro lot ranges from 0.01 to 0.09, while the mini lot ranges from 0.1 to 0.9. Then we have the standard lot ranging from 1 to infinity. That's a function of your account size. I'm going to explain that later on. I think it will be more appropriate for me to use a note. Let me see. I think I'm finding it difficult to kind of access my board here. I don't know why. Okay. I think it's taking time, so let's just continue with the notepad. All right, so I'm going to clean this off so that we understand clearly what we are doing. So the way lot size work is, already said we have 3 types of lot sizes. So we starting from the minimum, which is 0.01. Now for 0.01, now each lot size has a unit. All right, so for you to be able to trade 0.01, you should have a minimum contract amount of $1,000. That is why it is called a contract amount. So for the minimum amount, the minimum contract amount you need to trade 0.01 is $1,000. All right, then for that $1,000, for 1 pip moved, they're going to be earning 10 cents. All right, you're going to be earning 10 cents. Let me write it out, 10 cents. All right, so we'll now move to the next one, which is 0.02. So for you to be able to trade 0.02, you need minimum account of $2,000. All right, so for that, for each 1 pip again, you'll be earning 20 cents. Now the most important thing you need to take note is that for 1 pip moved in the market for 0.01, you'll be earning 10 cents. That is what is important. So the total pip moved on Euro USD today is about 80 pips. All right, the market has moved 80 pips. Automatically, you can now easily calculate how much you will have made if you are trading 0.01. But let's just run this down so that before we can start doing the calculation on how to understand how much you make in the market and how much you lose based on your lot size. So you need 3,000. Now I'm not going to be writing the contract amount anymore, or 1 pip, so that will be faster. So for 1 pip here, later you can calculate the number of pips. You need what? 30 cents. So I'm going to jump to, so just like I said, all these are just arithmetic progression, and so we'll just jump to 0.9. For 0.9, we have now we now have 90 what? 90 cents. All right, we have 90 cents. So when you now, after 0.9, the next lot size, which is the beginning of the mini lot, we have 100 cents. And remember that 100 cents is equivalent to what? $1. All right, 100 cents is equivalent to $1. So automatically, if you are trading 0.01, for 1 pip moved, you have what? $1. Then for 0.2, for 1 pip moved, you'll be having what? $2. All right, so for 0.5, just like I earlier said, just an arithmetic progression, for 0.5 automatically you'll be having $5. And for 0.9, what we have is $9. We have $9. So that takes us to the last type of lot size, which is the standard lot size, from 1 to infinity. So for one lot, we call it one standard lot. One standard lot, what we have for 1 pip is $10. So you just need to know that for each account you're entering. So remember, I think, let me just make this clear. Remember that what you need, the contract amount you need for 0.1 will automatically be what? $10,000. All right, $10,000. That is the contract amount needed. And for one lot size, the contract amount needed is now $100,000. So if you're taking 10 lot size, the contract amount, sorry, you're taking 10 lots. The contract amount needed, okay, you first of all, for each 1 pip moved, you will be making $100, but you need a contract amount of $1 million. All right, I think this is more like the breakdown of how the lot sizing works. So I think I'm going to send a screenshot of this to the WhatsApp group. I'm going to send a screenshot of this to the WhatsApp group so that just for reference purpose. Now it's not difficult, it's just because this is the first time. All right, this is the first time, but you really need to understand the lot, how the lot sizes work, because it is now the lot size and the pip value you will use to be setting your stop loss and take profit for every trade you take. So you have to take your time and digest it. All right, you have to take your time and digest how the lot sizes work. So I'm going to open a table here so that you understand it better. So we have the first micro lot, which is 0.01. Like I said, for per pip, which is 1 pip, we now have what? That is what? 10 cents, which is 10 cents divided by 100. We'll be having $0.1, so that will not be confused. So if the market has moved only 20 pips, you make $2, and if the market has moved 40 pips, you will have made $4. If the market moves 60 pips, you have made $6. Then if the market has moved 100 pips, we now understand that we'll be making what? $10. Now, remember I said yesterday that Euro USD was to sell because of the bank holiday. All right, so if you are selling Euro USD and the market has moved 80 pips, can somebody answer me on the group? If you were trading 0.1, how much will you have made? Okay, you can answer on the chat box. Let's see. Remember, I said that the question is, if okay, somebody is asking. No, I said for 0.1, not for 0.1 lot. The question is for 0.1 lot. 0.1 lot. You're trading 0.1 lot. All right, and you made 80 pips. How much will you have made in dollars? I need somebody to, okay, good. David has gotten it correctly. It's $80. That is very correct, because remember I said that one lot, 0.1 is what? 0.1 lot is equivalent to $1. It's simple. So you just multiply 8 by $1 and you will have made $80. But the person trading one standard lot for that $80, for the same 80 pips, remember the person trading 0.01 will have made only $8. All right. But the person now trading one lot size will now be making how much for the same 80 pips? The person will have made what? $800. All right, the person will have made $800. Correct, Isaac. All right, the person will have made $800. So you see, it becomes easier for the rich. Remember I said there's always a contract amount for each account size. There's a contract amount for it. So we can be taking the same trade, but because of our account size, we will now be making different profits. But what matters is your trade analysis and your capital. Right, so there's always a capital. For each capital amount, there is a recommended lot size. But I know some of us will be wondering, this contract amount that you're mentioning, it sounds strange to us. Now that now quickly takes us to what leverage is. It is leverage that when you're opening an account, you are supposed to select a leverage. It is the leverage that now enables you to manage to trade with $100 account. So remember, leverage is in ratio. Leverage is in ratio. So let's say open an account of leverage of 1:100, and you open a $100 account. All right, it means you have 100 multiplied by 100. It means you have $10,000. That is what it means on the back end. So that previously with your $100, you're not supposed to be able to trade in the forex market, because you have been able to take a leverage, that now helps you to be able to take a position in the forex market. Does that make sense? So if I have a leverage of 1:500, and I have I funded a capital of $1,000. All right, what this simply means is, in essence, what you have is 1,000 times 500. That's what it means. And what that simply means is you have grossly $500,000. It means you can actually trade a lot size of 0.5 with your $1,000, which is actually not advisable. So sometimes the leverage can lead you to taking position size that is not equivalent to your account size. So it's very important you understand that when you're learning how to trade, you should take a very low leverage. All right, you should take a very, very low leverage. I know some of us are already lost completely, but just the most important thing to take home today is go back and learn what lot size pips is. Go through, understand the pips and how to calculate the pips manually. And if you have a laptop, it's very simple. You can use your crosshair to measure the movement, the price. And okay, I believe I believe then the lot size is now the contract amount for each position. So before you take any trade, you will calculate your lot size. So the first thing we're going to be doing tomorrow, before we learn how to okay, let's see if time will permit us. Let's see if time will permit us. Now, um, for me, the recommended lot size for each account size outside leverage. So just know that it is a leverage in the market that enables you to, let me see if we can send a screenshot of this again. I think it will help. So just know that it's the leverage in the market that enables us to more like trade in the market. So I believe that is well understood now. Okay, that is well understood. But a quick one, for each account size, what I recommend is, if you have, for me, for proper money management, for you not to lose your money, all right, for each account that you have, for let's say from $1,000 downwards, for me the recommended lot size is 0.01. You should be trade with 0.01. okay, lot size. Then if you have $2,000, all right, you can trade with 0.02 to be on the safe side. So any account, just like that. So it's just a progression. So if you have $5,000, okay, to be on the safe side, you can be trading 0.05 lot size. But there's what we call a calculated risk. There's what we call it a calculated risk. I will see if I can take time and do how to use. There are actually a lot of PIP calculator or lot size calculator or risk calculator on Play Store, possibly on your iPhones. All right, but for me, the manual calculation to calculate my risk, we have to learn that so that you will understand how the risk calculators work. All right, so just a quick one. For me, what I have is your risk amounts. Your risk amount in percentage. So it's really important to understand that risk amount in percentage divided by your stop loss in points. Stop loss in points. That will give you remember I said we're doing normal lot size, but that will not give you your should I say recommended lot size. So let's say I have $1,000. All right, and I want to risk 10%. 10% of $1,000 is what? $100. But and I want to risk. I want my stop loss in points now. So let's say my stop loss is 20 pips. It means my stop loss in points is now what? 20 times what? 10. Remember at the beginning of the class I said 10 pips equivalent to 10 points equivalent to 1 pip. So I'll be having 20 pips stop loss will now be divided by what? 200. So can somebody tell me 200 divided by 200? What will we have? What will be our answer? Okay, so 100 divided by 200 will give us, for that risk of 10% of your account, you can take 0.5 lot size instead of 0.01. It means if the trade goes wrong, you will be losing only $100, which is 10% of your account size. But if the trade was to go well, all right, you will now always make sure that your risk to reward, you must have, now we're risking 20 pips. Your risk to reward should always be what? Higher. So your risk to reward minimum should always be 1:2. So if you're risking 20 pips, your take profit should be what? 40 pips. That should be your what? Reward. Have that at the back of your mind, and you can even increase your reward sometimes to 1:3 sometimes. All right, so at this junction, I'll create time for us to take more time to understand all I've taught today. And if you have any question, yes, excellent. Somebody already answered the question. Good. Thank you, David. So I'll open the WhatsApp group for more questions, and tomorrow we'll continue from where we stop. We'll learn the types of tomorrow we'll be learning types of trading, which is instant execution and the pending orders. We'll learn how to do that as well. All right, so thanks everyone for coming. Even though most of us came in late, and let's try and come in on time so that we can fully utilize the hour that we have. Thank you very much and good night.